Buying a house is usually the largest financial commitment a person makes in life. Yet many buyers walk into the process relying on rough estimates or guesswork to figure out what they can actually afford month to month. To find exact figures for your monthly payments and total lifetime interest, you need a dedicated tool like the Calculator Max Mortgage Calculator. Before you even open the tool, you need 3 specific numbers. First, identify your target home price and exactly how much cash you plan to put down up front. Second, find a realistic estimated annual interest rate. You can base this on current market averages or your personal credit score. Third, decide on the timeline for your loan. Gathering these 3 specific numbers right away eliminates the financial ambiguity. You start your search with a clear, realistic baseline for your actual purchasing power. Let's start with the first field, the loan amount. A mortgage is a specific type of loan where the property itself serves as collateral for the debt. The most common mistake here is typing the total purchase price of the home directly into this box. This equation shows exactly what you need to do instead. You take the total home value, let's say $350,000, and subtract your $50,000 down payment. The result, $300,000, is your actual loan principal. You drop that final number into the loan amount field. Isolating this exact borrowed amount sets the correct baseline, because this is the specific figure the bank uses to charge you interest. Next is the annual interest rate field. This represents the yearly percentage cost the lender charges you to borrow their money. The exact rate you receive depends heavily on your personal credit score, as well as overarching national economic conditions. You'll also encounter 2 main types of rates. A fixed-rate mortgage stays exactly the same throughout the life of the loan, while an adjustable-rate mortgage can fluctuate as market conditions change. When you enter your rate into the calculator, be careful with the formatting. If your rate is 6.5%, type it exactly as 6.5, not as a decimal. The tool handles the percentage conversion for you. Interest on a mortgage compounds over decades. Even a fraction of a percentage point difference here dictates the long-term affordability of the property. The final input is the long term. This is simply the total number of years you are allotted to repay the debt. In the United States, the standard mortgage term is 30 years. However, lenders often offer 15-year terms and 20-year terms for more aggressive payoffs. For our example, enter 30 years, then click the Calculate Payment button. This equation shows the standard mortgage formula running in the background. The calculator is instantly processing your principal, monthly interest rate, and total number of payments to solve for your monthly payment. Providing the time frame locks the final variable into place. The algorithm immediately transforms your raw data into a fixed monthly obligation. The first thing you see is your primary result, the estimated monthly payment. In this scenario, it comes out to $1,927.89. To understand the full picture, scroll down to the payment breakdown section. You can compare that monthly figure directly against the $693,640 total lifetime payments you'll make over 30 years. Look closely at how that total breaks down. You originally borrowed $300,000, but over 3 decades you are paying $393,640 in interest alone. Seeing that the interest costs more than the house itself often causes sticker shock, but this is the standard mathematical reality of any long-term amortization schedule. By separating principal from interest, the calculator shows exactly how much of your money goes toward the loan balance versus the cost of borrowing it. You now possess a clear, accurate, and actionable monthly housing budget based on real data. Now you can test different scenarios. Try cutting the loan term down to 15 years to observe the reduction in the total interest you'll pay. Or test a larger down payment. You'll see exactly how lowering that initial loan principal eases your monthly financial burden. When you're ready to dig deeper, you can explore adjacent tools on Calculator Max, like the Amortization Calculator and the House Affordability Calculator. With these figures in hand, you have the specific data needed to compare loan offers and choose a house that fits your actual budget.